Taxation of virtual digital asset, India. The timeline chart represents several events that happened around the crypto asset space in India from the regulatory side. Mechanism for taxation of virtual digital assets was brought into the tax regime in Finance Bill 2022, effective from April 1, 2022. The definition of virtual digital assets included in Section 247A of the Income Tax Act is broad. It includes non-fungible tokens, currency like bitcoins, and any other coins which are traded digitally. Also, the central government is granted the power to specify any other digital asset in the definition of virtual digital assets by notification in the Official Gazette. Taxation rate. Section 115 BBH of the Income Tax Act provides that income or gains arising on the transfer of virtual digital assets shall be taxable. The income or gain is taxable at a flat rate of 30% plus applicable surcharge rates, as the case may be, and health and education cess of 4%. Allowance of deduction and carry forward of losses. No deduction is allowed for any expenditure other than the cost of acquisition. Also, the cost of acquisition does not include infrastructure costs. Further, the set-off of losses arising on the sale of virtual digital assets is not permissible against any income, and there is no carry-forward of these losses. Non-allowance of basic exemption. The basic exemption limit will not be available as the section contains non-obstante clause. Gift. It is specified that where virtual digital assets are gifted, the same will be taxable as income from other sources in the hands of the recipient. Further, 2 notifications were issued providing further clarifications in certain areas as stated in the screenshot in the slide. Tax deduction at source. Section 194S in relation to tax deduction at source was introduced for payments made for virtual digital assets. Any person who is responsible for paying any consideration to an Indian resident for transfer of a virtual digital assets is required to deduct tax deducted at source at the rate of 1% if the payment exceeds the relevant threshold limit, from July 1, 2022 onwards. Circular issued in this regard are as follows. Circular number 13 of 2022 deals with guidelines for the removal of difficulties under subsection 6 of Section 194S of the Income Tax Act. Circular number 14 of 2022 is an order under Section 119 of the Income Tax Act in relation to tax deduction at source under Section 194S for transactions other than those taking place on or through an exchange.